We'll see. I mean, the year is young. I think that there's a lot of fear in this market right now. And in my personal opinion, as I have been saying on the channel, the short term continues to look rough, but the long term for me looks like an opportunity to buy the dip. That is how I've been kind of approaching the market here in recent weeks. I don't have a whole lot of long positions on the S&P or the NASDAQ or anything, but I am actually slowly looking to buy the dip. I've been selling puts on specific stocks that I like, but really where the bulk of my positioning is long gold and long TLT. Those are the two kind of primary positions in my account right now that I'm currently looking at. Gold has scooped the lows here, nice little bounce back in the last 2 trading days. Well, really 3 trading days. You had the big sell-off on Friday, followed by buyers coming back in, and they were actually able to push back above this level of resistance. That was basically my cue to go ahead and get long, and I put a stop just below structure here. Somebody asked me in my Discord, they said, Nick, how did you know that that support level would hold? Like, what part of the chart here showed you? And I had to give them the real answer. First of all, you never know if a level is going to hold perfectly, right? If you have a nice level of support drawn, that's great, but the market can kill support levels as fast as it wants to if it's really fundamentally bearish. Like, you know, here was a big level support. Once that level got taken out, we just saw the follow through to the downside. This level of support here for the S&P 500, are we going to hold here? We'll have to see. But if you get a close, you know, a support level is only as good, in my opinion, as the fundamentals that support the support level, if that makes sense. Like, if you're looking at this and you're saying, look, more tariffs and growth expectations are seriously deteriorating for the United States. If that theme holds up, this support level is going to look meek in front of a bulldozer of a bearish move, right? So my point is, when you're looking at something like gold, somebody asked me in my Discord, they said, Nick, how did you know that that level of support would hold? The answer is it has nothing to do with the technical chart. So I'm not going to reveal who this person is, or I don't want to, you know, they had great questions and they're reasonable questions, but it shows, you know, how much traders typically overestimate the abilities of technical analysis and underestimate the abilities of fundamental analysis, right? You can't predict the future. Nobody can perfectly. You can have an educated guess about an area, but you never know if a support level is going to hold. So I'm in this trade. It's starting out well, but the trade is young. This thing could completely reverse and fall apart, in which case I'd actually look to buy the dip further around that 2780 level that I've been talking about. But the answer is, you know, he was trying to say, he's like, well, no, but did you like look at the lower time frames for confirmation? Like, how did you know it was going to bounce? And I kept trying to say in my DM to him, you never know. You have to look at the 3 prongs, if you will, that we always talk about on this channel. This is why I took this trade. If you want to know why I took this trade, right? It's the 3 parts. The technicals are the simplest part of the whole trading strategy. We have an uptrend, that's pretty clear. Pulling back into a support level, that's pretty obvious. That's all the technicals. That's it. So, if it breaks those lows, stop out. That's all we do for the technicals. No more complicated than that. I know exactly how you feel if you're new to trading and you're like, no, but I want to know your secret. What's the real reason you took that trade? That is the real, there's nothing proprietary or secret or magical about my technical entry strategy. Key level support in an uptrend. Maybe it works, maybe it doesn't. Right? That's all. Okay?
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So I'm being so, I'm emphasizing this so heavily because this is a common mistake for new traders, is they say, no, but really tell me why. How did you know that that was going to hold? I didn't, right? I'm telling you, I don't know what the market's going to do perfectly. Nobody does. I made an educated guess based on the technicals, but if you only hear the technical part, you miss the rest of the whole reason the trade was taken. Technicals is one part. What about sentiment? Well, actually, we saw as this market sold off, people started to get very bearish on gold again. And so we had a nice crowd reversal signal, contrarian bullish reading. That was part of the Edge Finder's score on gold. So that was another reason, right? So we saw the crowd got bearish. We also know institutional money is bullish. What is SA? Sentiment analysis. What is TA? Technical analysis. What is FA? Fundamental analysis. These are the three pillars to why I take trades. Okay. So technicals, key support, and an uptrend. That's it. Don't make it any more complicated than that. You don't need to name things fancy. You don't need to spend all day long filling out notebooks full of stuff about technical analysis. It's a waste of time, in my opinion. Look, my trading edge doesn't come because I can spot a support level. Anybody can do that, right? To have an edge in something, you can't try and find an edge in doing what everybody else is doing exactly the same way, right? So fundamentals, sentiment, technicals. Sentiment, how do we know that sentiment is good for gold right now? Well, we pull it up. Let's take a look at the COT data. COT chart. Gold is very net bullish, right? 85% of institutional positioning is long gold according to the commitment of traders data. The CFTC's non-commercial COT data shows us that we have heavy overall bullishness from institutional money on gold. I'm not guessing. I'm not trying to tell you that smart money is doing this in the candle. None of that nonsense. Straight up, we know institutional positioning because it is reported to us by law through the CFTC's commitment of traders data, right? So no, if you're like tired of the whole like, oh, smart money is doing this secretly, and you're trying to like interpret candlestick patterns to figure out what big money is doing, candlesticks can be highly deceiving. If you want to know what institutional money is doing, you're looking at it. Institutional money is tracked each week on the commitment of traders data. We can see it, right? We have tools in place so that we can watch this stuff week to week. That is what we're looking at. So we have big money long gold, right? Okay, cool. What about retail? I guess we could take a look at the put to call ratio to see what the options market is telling us that retail is doing. Retail went from very bullish on gold right around. So let's look at this, guys. This is crazy. So on February 24th, retail or just general options volume went heavily bullish on gold. February 24th. When is that? You ready? You can't make this up. That's February 24th. The put to call ratio signaled that everybody got super bullish on gold right at the top, right? This is why we use tools. This is why tools are important. We don't look at this stuff for fun. I do, but we look at this stuff too because it's really important. Everybody got bullish on the worst possible day. And then we spiked back and people got more cautious on gold, right? That spike back was part of the reason I actually got bullish on gold, is because sentiment flipped from very bullish, everybody was bullish, to then, okay, everybody got a little scared. There's the opportunity. COT data looks good. So big money's long, right? Smart money is long. The crowd kind of fizzled out. We had a technical reading to the upside, and the fundamentals look good, right? So I've just showed you exactly how the Edge Finder played a key role in finding the trade that I'm in right now on gold. Okay. By the way, I changed up the economic heat map a little bit. We got some improvements to this. I moved the surprise column to the left. I found it kind of hard to look at. This is just a nuance for me I use the Edge Finder literally every day, all the time. I didn't like having the surprise column way over here because the way I'm reading this, right, I want to see surprise is the most important in my opinion when it comes to economic data. Actual and forecast are important, right? But show me how much did we surprise the market's expectations. That way we can look at this red to blue. And I think that this is a way better improvement.
I want to share something actually. I haven't shared this before. So I've been doing pretty well as far as trading goes, but I wanted to shed some light on something that I'm experiencing now that I think could help you guys. So as far as my positions go, I'm still in the Swiss yen sell. I'm doing good on that one. It's in profit. And guys, feel free to ask me any questions about what I'm about to go over. But we are, my initial intro was here, and then I added again here. And so now we are about 240 pips in the profit. Now, another thing that I wanted to go over was drawdown. So right now, as I mentioned in my weekly outlook, I wanted to go ahead and engage in euro sales and some dollar bullishness. Now, I mentioned that we were, at the 105 level last week for a very long time, and how I hesitated because I thought we could go higher. And then when we did go ahead and break and flush downwards, when Monday night or Sunday night, Monday morning happened, I went ahead and entered my first entry on the euro at the 104.5. Now, I was going to add again at the 105 and then possibly again at the 106, but I wanted to shed some light on risk management and I guess correlation risk, and how when I was first starting, um, you know, I had like a fixed system where I said, okay, this is entry one, this is entry two, entry three, and I was really firm on that. But as I guess developed and was more aware of macro, honestly, and economics and what could move the market and risk in the market, that helped me tailor my risk management more. So because I am in this euro short here at this, if you're looking at price where it's at now, it maybe not be the best entry. And I'm also in dollar Swiss, which I entered here, and you could see that my stop almost got tapped. We were shy a couple pips there. I'm not going to add anymore. I'm going to just hold on to what I have and manage risk. Before, what I would do is I would just add at the levels that I had predetermined and just wait for that to happen. Now, I'm not saying that's a bad thing to do. If your lot size is a lot less, then you could probably afford to do that. But um, because these two trades are correlated in a way, I don't want to add more risk or inject more risk into the market, especially when you have Trump doing his tariff announcement. I believe it's 9 p.m. Eastern today. Um, so when I'm trading, I need to be very mindful of the environment. And because of that, I'm going to stick with my original entry, let it play out. It wasn't a huge amount of risk that I did initially. Um, and I'm just going to let it play out. And there's a very good chance that with the volatility that, I will get probably stopped out. Was it this afternoon? I guess my financial juice is completely wrong. So Raz, you are completely right. The dollar Swiss, if you're looking at it, right here, it is very much in a downtrend. Now, these were areas of support that I was very interested in. And these are, areas where I thought we could, get some more upward movement there. And so with my initial entry being there, and now we are over here, I'm going to wait on adding a second position. And my basis for this trade was, let's go ahead and get some really strong or stronger than expected economic growth news, and let's see if NP comes out right. And so that is my, why I initially got into the trade. Had that not been the case, and had we just been trending down, and numbers have been coming in hot, numbers have been coming out bad, forecasts are supposed to be bad, then I probably wouldn't be in this trade. I would probably continue to stick with just only the Swiss yen position. So thank you for bringing that up, Raz. Tariffs hit this afternoon, yes, and then I think Trump went ahead and put an extra 10% on China. So it's going to be 25% Mexico, 25 Canada, and then 20 on China. This is what I would look on the euro. Honestly, I don't trade this pair, so take what I'm saying with a grain of salt, but I would give you my honest opinions on it. We are in this zone here. We're looking, it looks like a chop fest to me. We've been in this range. You have these wicks. Now I am short the euro, so this may help the case for the euro Australian dollar. I can actually look at the edge finder and just kind of see where that is leading us. We'll do miners only. Euro Australian is bullish on the edge finder, so maybe that might be a thing that I would, if I were you, I might hesitate on. If the Euro, if the edge finder is giving that a bullish reading, it's for a very good reason. So maybe if you were to take this trade, maybe have a wide stop loss or lower size to kind of absorb or be able to manage any swings that you would, have to take. Tax season I'll give you guys this insight. My situation this year for taxes is a little crazy. Now, I don't know how it is in other countries, but I lived in 3 different states in 1 year. And I had, if we're looking at 2024, that's when I was still at the bank. I had a job, and so it is very tedious. I learned a lot from my little conversations with my brief conversations with CPAs. I have to basically calculate how much money I earned in each state while I was there, and I have to do part-time resident filings in each state. It's pretty crazy, but I'm hoping that Chicago is a more permanent for the time being, and that I don't have to do that again. Capital size and risk management. Well, I think that is something that it's hard, right? Because it depends what your goal is. If your goal is to, I guess, supplement income, or I actually found out that a lot of traders or retail traders don't want to make this like a full-time job. They just kind of want to get some extra money to help them out. And if that's the case, then you maybe don't need that much capital to trade with to achieve that goal. But if your goal is to, I don't know, make this a full-time job, or even, we can go further and say you want to be a fund manager, well, then you need a lot more capital. But the downfall is that, maybe not a lot of people are capitalized well. And so that forces you to, size up when you maybe shouldn't have, or, kind of ignore some risk management principles because you're trying to make, X gain on you're trying to make a really large gain on a smaller relative account. And so that's where it only takes a few mistakes to go ahead and really hurt yourself. Now, I know that in the stock trading world, equities and options, there are a bunch of talented options traders out there, and they just load up an account with 20, 30 or 25, 30 grand because of the PDT rule. And they can, turn that account really crazy, but they're able to do that because they're very experienced. Their system is really defined. So I would just say, if you're interested in doing that, then, just ask, is your system working? And only you will know that. Only you will know that, and you will know if you're able to take those risks.
Okay, let's get to some currencies really quickly. Dollar index, again, to revisit this. Here's currency strength for the day. Let's look at yesterday versus today. So yesterday, interesting breakouts. We had Japanese yen weak to then strong, crazy amounts of risk off trading in the afternoon. So the Japanese yen ripped up higher. The Swiss franc stopped up there. We got euro and pound up yesterday. This is yesterday's price action. Okay. CAD took a big drop lower. Today, we're getting a little bit more volatility. I mean, we've got a big swing here on the Japanese yen and the CAD yesterday. And then today, I'd say steadier. We're probably getting some higher daily trading ranges on currencies. If anybody's in the Forex market day in, day out, you're probably noticing that intraday volatility might be increasing with some of these risk-off flows. Japanese yen and Swiss on top today. So again, showing a bit of a safe haven risk-off flow and tone to the market. So just a quick spot check. Aussie CAD, I'm still holding long. Aussie Swiss, son of a biscuit. Looks like my Aussie Swiss might be time to buy. I could just basically level myself into here to pair some of the core positions I already have. But not a bad spot. Starting here, revisiting flash crash lows, build a position, take it back to a center high. I might take some losses here. I did start buying a lot of this Aussie Swiss in this area, so I might end up taking some small losses. But if it gets back to this high, as far as the net position goes, I'd love for this thing to be all the way back up to 6,000. A double bottom measure move. This would be the center high. If we go low, high, and we break that higher, I'd measure that move up towards 6,000. Okay, it's not that the Aussie's so weak. It's mostly that the Swiss is strong because we're getting some safe haven flows. Aussie New Zealand's. Okay, I'm going to hang in there for this one. Aussie dollar. I closed out of Aussie dollar when we hit the pocket level. I closed out here right around this previous support. So I grabbed 2 winners out of the Aussie dollar right there. CAD Swiss, looking like a trade that if you want to get and again, this isn't necessarily calling the bottom here, but if I could dollar cost average into, I probably just need to start adding more. So one position here, another position right at the low, and then wait for a price pattern to emerge, and then look at stacking up some buy stop levels and get this back to the center high. So it's going to take some time, but I do like this opportunity on CAD Swiss. Just keep adding to my overall position, which is like really small. I've been trading this thing since 2022 and still building. So hopefully this flash crash low from August is going to hold. And if it does, that's a great spot to just run the sellers out. There's no more selling pressure. And all of a sudden we go up, 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 back to center highs. So CAD Swiss, I'm going to start adding a little bit more to it. Let's see here. Swiss yen, I closed out for profit on that one. CAD yen, back down to these August lows. I don't know if anybody's trading the yen crosses. It's my least favorite currency. That's why I decided to trade futures instead. Aussie yen. You know, this is going to be a really interesting spot on the yen crosses, because if we go July to August and this market wants to bounce at those lows, don't be surprised if we have some risk appetite coming back to the market. It may not break those lows, right? I mean, some traders might look at this and say, "Oh, this is a perfect little symmetry trade, and we're gonna flush lower." Maybe it does, right? But I wouldn't be surprised with the damage that this did from July to August if this market finds a way to fake out here and then get back into a range. So this could be a really low risk, high reward scenario as long as you're not getting beat up too badly around that support. Just be careful at that support level, but I think that could offer a really nice high reward, low risk scenario. But you gotta watch your price action. Okay, plan for gold. I'm just gonna wait for pullbacks. I want to see bigger pullbacks on gold. Let's go CAD Swiss, CAD yen. We did. Let's go Euro pairs, Euro Aussie. Aussie's weaker. Euro stronger. Again, kind of some safe haven flows. Dollar's been weaker as well, which makes the euro stronger. I got no trade in this one. It's been ripping pretty inefficiently. We've got like six or seven candles in a row now. 1, 2, 3, 4, 5, 6, 7, 8 daily candles in a row. That's quite a stretch. I wouldn't be too surprised to see this resistance area or this resistance area hold in some capacity, at least in the interim. But I don't know. Don't call the top. Look for some price action to give you some evidence. Look for a bear candle to see if there's any follow through. But again, resistance area. Look for some price to support your confirmation that it might be fading. 8 candles in a row is pretty high. Euro CAD breaking higher. This is why I didn't force trades on Euro CAD, Pound CAD. I just didn't know what the CAD was really doing. I'm not trading it. Euro Swiss. Showing some resiliency, which is fine. I got some stacked up orders. I'm still got a big position running on this one. Euro Pound closed out for a break-even trade on this one. It was like a small winner, like 50, 60 pips. That's it. I'm not in this trading any longer. I don't really care about this one. I let a robot trade a lot on Euro Pound. It's, only moves like 30 pips a day. Euro Yen back down to that August low. This is going to be an interesting spot. Same thing as Aussie. Are we using this level to bounce? Right? I mean, if you're looking at a smaller time frame, look to see if you got some price action to support the evidence that this is wanting to go up, stop loss below, and there is some really good potential. Just coming back into this cluster could probably be like 1,000 pips of upside, and you're trying to get as little risk as possible, but you might have to give yourself like 200-300 pips of wiggle room and also trade some confirmation. So I wouldn't call the bottom, okay? But I don't know, just be careful. Yen pairs are tricky. Euro New Zealand also ripping higher, another like 7-8 candles in a row, probably similar to the Euro Aussie. I wouldn't call the top here. I would just let it do its thing. But if you're not long, don't get long now. If you're looking to get short, wait for better confirmation. Euro dollar in the 105.30 area. If we're going to have a nice turn on the euro dollar, I'd like that to be somewhere in here. I'd like resistance to hold around 106. If the dollar's going to turn, that's that 106 to 105.50 zone. And if the euro dollar turns, look for some resistance in here. If we break back down, we could see this revisiting lows again. This discussion of getting back to parity could be on the table, maybe. But trade your dollar index, watch your euro dollar, don't do anything stupid. Pound dollar, pound Aussie. Pound Aussie, pound New Zealand, probably doing the exact same thing, just up 7-8 candles in a row. Don't get silly. That's a big move. I wouldn't call the top. I'd wait for smaller time frame confirmation. Right? I mean, I said here for the last couple of months, it's like you've got really good dynamic support. You've got a swing opportunity on pound Aussie, pound New Zealand. The hard part is that's a crazy move, man. I mean, this thing's up 700 pips and it's been up every single day for 7 straight days. That's not a usual Forex move, right? So there's clearly some crazy gains to be had, but that is a wild move. Pound CAD also heading to fresh highs. Okay, a lot of chopping here. Now that we've broken a lot of this resistance, like I don't really know what the pound CAD wants to do. We're in some open space. If we don't stall here at like 8,500, this pound CAD has plenty of room back to like 9,000. Who knows? I don't know, but be careful. Trade what you see. Follow what you see. Pound Swiss is still showing some resiliency. That's fine. Pound yen, careful on that one. There might be some room back down to this highs and lows. So if we're going to continue to look lower towards that August 5th bottom, maybe a bouncing point and a stop loss with some good swing trade opportunities for higher reward than risk. Pound dollar, if it turns over, it's not there yet. I need to see the pound dollar break this trend line. So if we fake out here, roll over, possibly that trade with a revisit of the lows. But you got to get a good sense of what the dollar index is doing. If the dollar index looks like it's continuing to drop, then I wouldn't call shorts on euro dollar or pound dollar. New Zealand CAD, I'm still long in this one. This is just a big range trade that I'm dollar cost averaging into. New Zealand Swiss, probably going to get an opportunity just to keep buying into this flash crash low August 5th and just hang on to it for some positive swap and some good upside potential. New Zealand yen, I'm staying out of. It's back down to these lows. Watch and see if it behaves or bounces off that level. Okay, there's 2 levels I'd watch really closely. High, low, lower, high, equal low. Watch this for potential bounce. Okay, so we could have just a nice opportunity for a tighter risk and a good favorable reward to risk on these crosses if these August 5th lows on the yen pairs hold. Okay, if that is not the case and we have more risk off trading where everything is down, high, low, lower, high, lower, low, hitting symmetry, then we have a likely bounce. So if this doesn't behave, don't force that trade. If it does behave, we could have a respectable bounce and we have, 700 pips here or so, almost 900 pips. You could have 1,000 plus pips on the euro pound or the pound yen, or the euro yen pound yen. So there is potential, but man, you got to just confirm it on the smaller time frames. New Zealand dollar. I'm still hanging in there with some longs, and I'm trying to get back to equal highs or even 50. I'd say 5,800 to 5,850. I'll close up my New Zealand longs. Dollar CAD, interesting turn of events. I thought, and this is still a possibility. With that little weekend fake out, I was just totally a liquidity hunt. If this is going to be a topping pattern, you want to look to see if this thing turns. If anybody's looking to short this on a swing trade, there's your opportunity, but don't force that sell trade. I think that stop loss could certainly be grabbed. I think with this tariff talk, the U.S. economy is probably in a better state than Canada. Be careful, because if we break these highs with some conviction, I'm telling you, this could still be going higher. If we look left on this chart, look left on dollar CAD, what is stopping this thing above 146? Nothing. Right? 146, we can go to 150. 150, we can go to 155 or 160. Why? Because it's been there before. There's your highs back in 02. So don't call the top. Now, it would make sense that if we hold resistance, that we have this intermediate level of support and all the way down here back to 125, 120. I just don't know how Canada or oil necessarily gets stronger. So I'm super happy and lucky that trade worked out. Lucky, sure, but it was a long time coming, and that trade took forever to line up. So I'm just not forcing trades. That's really what it is. If we break this high, I think dollar CAD long still works out. And it might be like the most ridiculous trade, but guess what? If it hits 160, I'd love to short it and take it down for thousands of pips. But if it doesn't happen, then I would just be watching. But nothing crazy on it right now, other than trade what you see. Dollar Swiss still offering a bit of a pullback. I may look at revisiting and reloading around the 50% zone. So if we pull back into here, 50 to 60 to 70% pullbacks, and even all the way to 100% pullbacks, just trade the range. So I can scale in here, stack up some orders, see if it comes back to range highs. Might turn out to be another opportunity. Okay, oil prices. Oil is testing the lows. I just don't think this is a spot to call the bottom. I think there's a reason, right? We could certainly hold that floor, but my biggest concern would be if we are going down, the last thing I want to do is be bullish on oil. Like literally the last thing I want to do is trade this thing like, oh, it's got to go up. If I traded oil up, it'd be a bull call spread, it'd be futures options, and it'd be defined risk. But I don't like this trade. I think oil is, we have made lower highs for the last year and a half. We have had equal lows for the last year and a half. And if this floor breaks, then there is room to drop. $55, $50, there's room to get down to those levels.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.